All right, what I want to share with you today, I know lots of traders out there. I mean, it's like a continuous question that people ask all the time is about where to place the stop loss at. Now, I'm not here to tell anyone specifically what they should do with their money, where they should place the stop losses, where they should take profit at. I share the strategy and how I trade based upon solely how I trade, okay? And the strategy in which I talk about is using multi-chart confluence, surrounding supply and demand setups, marking a higher base zone, lowering down or moving down to a lower base chart, and marking up a zone as well. It's all self-explanatory. It's fairly simple if you spend time watching the video content, all right? Spend time watching the video content with a note and pad and take notes. Now, today I want to show you some techniques in which I personally am myself have been, practicing and bringing into fold into my own trading. It's about, for one, I've already talked about where to place the stop loss surrounding the strategy and how I actually trade. That's stop loss placement. Number two, about trailing stops, okay? All right, trailing stop losses. What can we do to help us extend the run in a sense, okay? Maximize our trades so that we can pick up more ticks or points at the end. So I'm going to show you just looking at price action, say for example today, a trade entry that I took. I was unable to record it because I was doing some other business, but it was a great trade setup going long. Now, the key ingredient to this full recipe, of course, I always talk about is number one, if you are not familiar and have a hard time understanding or don't understand market structure, then do yourself the biggest favor and learn it, okay? Because it's going to make the night and day difference of you succeeding or failing within this business. Trust me when I say that. You have to understand, you just can't take random setups because, oh, this is a demand setup. Okay, yeah, it could be, and it could be a high probability area, but is it one that's moving in the direction with the higher base chart? All right, and in reverse, if it's a supply setup, the market's moving lower. Well, if the market is a supply setup and you taking it, is it one in which the market is moving in the direction moving lower? You have to have a bias. You have to understand structure in the market. Not just that. Pay close attention to price action, all right? What's resting above, what's resting below. I cover things like this across the channel in multiple videos. But I really go into detail about trade breakdowns for all those that constantly ask how they can become an elite member. Yes, you get trade breakdowns. That's where I walk through full-on setups, trades I've taken, ones I posted over the Discord. I break them down very finely so that lots of people can understand how I actually trade or why I enter those trade setups. Stop losses, where I place it at. Profit target, where I place it at. The strategy, why I took the trade. So I basically am breaking things down as if you're sitting next to me. So I'm kind of, holding your hand and letting you know why I took this trade from top to bottom. All right. Plus you get the plus you get the video playlist and a great video that I covered on market structure. There are tons of trade breakdowns as well. If you're interested, the link is down in the description portion of the video. It's titled "Become a Elite Member" right below that area there. And once you click on the link, 2 tiers will pop up. Make sure to choose the one for $6.99. And that's monthly, and that's going to give you direct access. So it's a very inexpensive fees to lots of video content covering the trade breakdowns. Now let's jump into the video for today. Again, we want to follow market structure, right? So we want to be able to identify which way do we need to trade, okay? So if I'm looking here at my higher base 120 range chart, and I see where the market is breaking structure to the downside as of yesterday, right? It was moving lower, and then we start to shift back to the upside. Why? We got a push up, pull back, market breaking structure, pull back, and then it starts to break more structure as it's moving higher. So again, it's breaking structure right here. We got structure breaks to the upside, it folds back, but then it breaks structure over this area right here, this high here, to the upside. Now, this right here was a supply area that I was focusing in on. I'm going to show you what happened there when we moved down to the lower base chart. There were no significant or high probability supply areas on the lower base 24 range chart. Again, I'm marking up my zones first on my higher base chart, the 120, moving down to a 24R, 24 range, and then looking for a supply area within this higher base zone, okay? If there's not one, and then there's not one created, then I'll just avoid that area because the market, as you can see here, pushed through it, and it was breaking structure back to the upside. Now, there is a demand area resting below here once we get like a structural break back to the upside, as you see here, breaking above these highs, this is a valid demand area. Now the market didn't come back to it yet, as you can see. And it could take some time for it to come back, but I'm going to pay attention over time to see what takes place. But what I did see was that after it broke structure here to the upside right here, there was market pushed higher, breaking structure, a demand zone resting right here. So we have one here, high probability, and one resting down here just as well. So this is the area in which I took the trade. This is the area in which I'm focusing in on this trade, and we're going to move down to the lower base chart. Again, marking the higher base zone. Now, again, we're going to talk about what a place to stop at, for one, and then stop loss placement in reference to trailing stops as the market is moving higher to maximize your position. All right, so I'm on my 24 range chart. This is the execution chart which I take my trades from. The bigger or larger rectangle box, that's the 120 range demand. Demand zone, yes, that I marked up. And then I move down, scale down, and then I'm looking for, is there a zone within the higher base chart area right here? So when the market comes back to the area in which you can see right here, I'm interested because I have a demand zone resting within the higher base or off front from the higher base chart. Higher base charts are king, okay? So at this point, all I'm looking for, okay, we tap, is a higher probability demand zone on the 24 range. Inside the larger zone, we get the break and close of the candle right here, say around 60, go long. Now, yes, you may be saying, oh, the market came back, but it wouldn't have stopped you out. Your stop loss is going to go right here around 949, 950, or 949, and maybe a few ticks below that, okay? You're going to have to give your stop some room to actually breathe. I'm trading based on the break and close of the candle. I'm aiming for, at least on the NASDAQ, at least a 20-point move on my trades, okay? All right, and again, I talked about the 20-point move, how much you can profit on both trading micros and the full-on E-minis. But if you're someone that likes to trade, looking for a quick 1-to-1, maybe a 1-to-2, use a risk reward tool, and you can identify those type setups. I mean, not setups, but those type profit target areas. So right now, this is marked up to be I believe a 1-to-2, right? Okay, so I'm getting in here. If you're getting in here, say at 60, you're going to aim for this area here at what we're looking at here, around 19,983. We'll just put it like that. Stop losses resting back here. Okay. So again, let's mark this up correctly and make sure that I have this correct. All right. So we're going for 1-to-2. Yeah. Okay. So we're going to place it right there. Now, what you want to be able to identify here is that, okay, I want to talk about some things you can do to, help you profit, okay, and stay in the actual trade. Now, let's say you're going for, let's just say you're going for a 1-to-1, okay, and I know a 1-to-1 is not, it's less than 20 points, because I do see lots of traders scalping for, 10-point moves and getting out, all right? So if we're going for a 1-to-1, let's say we're going for, the break-even point to where we can actually lock in some profit around about the 50% area, which is going to put us at 19,965. What you can do then is close most of your position off and then allow the market to leave a runner in, okay, one contract, to allow it to go up and hit that 1-to-1 and then maximize to see how much, allow for the run or trail to see how much further it can go. So, that way, you can maximize on the actual trade. Now, if you're going for a full-on 1-to-1, then what you can do is once it hits your 1-to-1, all right, move your stop loss to break even. So there's a couple of things you can do here. Going in at 50%, taking most contracts off, leave a runner, okay? Or what you can do is once it hits your 1-to-1, you can move your stop up from here up to the 60 area where you got into the trade at break even and then sees what happens. Because by then, you've already profited at 1-to-1, close most of your positions off there, and then allow a contract to run. So if the market goes up there and say you got 3 contracts on, okay, or even 2 contracts on, close one and then leave one running to see if it will continue carrying through to maximize and pick up some more points. Or and that way your break even sitting here. So if it comes back, all it's going to do is stop you out and nothing lost. All right. So that is a way to actually lock in on profit so it's not coming all the way back down here and hitting your stop. Now, in this case here, let's say, for example, as you can see right here, it actually, once you got to the trade, it went up here and hit the 50% area. Okay. You can, again, take most of your contracts off right there and leave one running. And as you can see, at some point when it does, it starts to come back. Yes, it doesn't stop you out. It goes back up. You maybe collected 2 additional points there, and then they pull the market back. I talk about this time and time and again. What the market makers like to do. They know people's stop losses are resting in the back end here, and they're going to test that area. So if you want to, once you get to the 50% mark, is take most positions off. Then, move your stop loss to break even. Okay. But, you're only going to be collecting 5 points and then moving it to break even. You can do that. Or if you want to, just allow the trade to play out. And then once it hits your full on 1-to-1 around 71, 72, then bring your stop up. Then you collected those 10 plus points there. And then you set in concrete, you're locked in. Okay. Got profit. All right. And you're not in a position to lose nothing because now your stop loss is at break even. Now, as far as trailing stops, the way to go about doing it. All right, so let's say that the market came up here and it hit our 50% area, okay? And either we pulled our stop loss up to break even or we left it here, closed most of our positions off, and the market starts to move higher. Now, what I like to typically do at that point is that once the market starts swinging higher and making, its first set of higher highs and higher lows, I'll move my stop to the last point of position where it made a higher low at, okay? So it pushed up here, came back, all right? And then once it breaks higher, move your stop from here and lock it in here at 61 or 62. I'm doing this and going through this because there's multiple ways you can go about. So there's different strategies and techniques that you can do to lock in profit so that, the market doesn't stop you out fully, okay? You're not taking on any drawdown, all right? You're locking in profit, and then you're trailing behind using a trailing stop loss so that the market doesn't, basically so it locks you in a profit. So now if your stop loss is resting right here at 19,962 and the market pushes higher, okay, look, it comes back, doesn't hit here. Then once it breaks above again, then move your stop loss from here. So basically what I'm saying is originally we could put our stop loss here, starts to make swings and making higher highs and higher lows, move the stop here, all right? Then once it makes another move to the upside, okay, pulls back and breaks higher again, then move your stop here. This allows you to collect as much as you can possible before it comes back and stops you out. So if you pay attention, the market then pushes higher, okay, and then let's see here, pushes higher, pulls back, and then it breaks higher here. So maybe you got your stop resting somewhere in this area up here, okay, and then it comes back and stops you out. So you've collected a lot off of that trade. So it goes from 19,960 all the way up to here, 992 before it stops you out, and you collected 32 points right there. So trailing stops work, but you have to have a technique and strategy of how you actually go about doing so and moving your stop loss up once you are actually into a trade. So again, this video is to cover where to place your stop at once you're into a trade, whether you want to and how to to set up your profit areas, okay, and the strategy of how we're going about doing so. Again, I typically like to set in stone for myself, trying to pick up 20 points. But again, you can use the 50% type technique to where once the market is up 50% in your favor, you can close most of your positions off, maybe move your stop to that break-even area, or leave the stop loss where it is down here and wait for it then to go up to the 1-to-1 and then bring your stop up to 50%, okay? All right, and then from there, just allowing the market to make its higher highs and higher lows, and each time that it makes a new higher low, move your stop up behind the last or previous higher low area at the bottom of it. That's how I do it, okay? These are different ways in which you can, again, to try to maximize profits. Just kind of test it out, see how it works for you. But it does work if you know how to do it, if you trade it correctly, okay? But again, this is the video in which I just want to cover that to kind of share with you because people always ask about stop loss placement. Is there a way to do trailing stop losses to where you can, move behind price or with price, but kind of moving your stop up accordingly? Here's a way to do it, all right? But outside of that, I appreciate everyone that tunes in and watches the actual videos on a daily basis. Thank you for doing so. I really, appreciate that. Again, if you're interested in becoming an elite member, the link is down in the description portion of the video. First link, Discord link. Second link is the link to become an elite member. But outside of that, guys, I really appreciate it. If you are a first-time viewer, please take the time to go ahead, click on the sub button down below. Make sure to turn your post notifications on. And last but not least, if you found value into today's video, please make sure to drop a like on the video. Take care. See everyone in the next one.